Good afternoon and welcome to June 15th. Disappointing as it is, KR has now fallen to 5%. That's all it's got out of that 37% we had way up here. We had 37% right in this zone, and now we're down to only 5. So we got 30, still have $31 good to our position. So now let's review the exit. The exit is the entry point. Why? Because the reason is that I'm now going to my fourth passing on the book called Unknown Market Wizards by Jack Schwager. And the recurring theme that occurs from all the pro traders that he's interviewing for this book, all have the same underlining: risk management. Keep the exits tight. One of them, I believe it's Bob Shapiro or Dollywag, has what they call a 5 day rule. If it's not in profit in the first 5 days, they will exit the trade. How will they exit the trade? They either will go to whatever position they're at, go last bar low, or if it's like hovering in here with not much profit, they'll go here. They'll go to the, if it's hovering near the entry point, they'll go to the entry point and get out at the entry point. The point is keeping the risk tight. That's what they call keeping the risk tight. What we're doing here is when we get into the trade, we got our entry point at the high of the candle and the low, the swing low. We look for the swing low. Now, technically, I could have put it here. That's right. I just realized that in rushing to this, I went to the lower one because this is much deeper than that one, but that one also too would have worked out just as well. The point is pick a swing low. I like swing lows that are a little bit more deeper because I want to get more opportunity to the top side of the for the profit, because once price breaks past the entry point, I'm going to the entry point stop. Yeah, I'm going to the entry point stop. So I already said I was gonna risk this originally. That is my third ratio target that I want based off this swing low, and I'm now here. So if we come down and get stopped out, then we're going to get stopped out. This is a plus 5% right now at the closing of 37.87, and we're looking at getting stopped out at 37.25. So we can calculate uh, approximately. We already know we approximately how much we might lose from this point to here, and that came out to be. So how would we do that? Quote 37.87 today's close minus the 37.25. If we do not have a gap, we're looking at 62 cents. The delta, we go and get the delta now to figure out the actual loss on it. And there you got to go to the back to the trade, go to the delta of the option you're playing. There's KR. There's our expiration date for October. There's our strike price of 37, and the delta is 57. So we come back to our trusty calculator. I like to keep that up back on the monitor. And now we go 0.57. So the drop from here to here is $35. $35 loss. We're at $31 profit. So remember, we have two. That's another point. We have to go by hundreds. Remember, on contracts 100. So there's 100. There it is, 35. And then we have two contracts. So that's 0.2. That becomes a minus, and we have 31 to the good. So we got plus 31. So we would anticipate maybe a $39 loss on that trade. How much would that be in a percentage? Well, that's easier. If we go 39.68, divide that by 2. So it was two contracts. Divide that by 100, and see, I missed a step here. Yeah. Oh yeah, 39, like that, 19, when round out to 20 cents. So we were looking at a 20 cents loss. 20 cents loss divided by the 2.65 as a percentage, we are looking at a 7% loss. 7 point, rounded up, 7 to a 5, 5 to a 6, 7.6 to 7.5 minus loss when if we get hit, take it out at that entry point. And that is all providing, remember, you have to really consider this, that we do not have a gap. One of my biggest drawbacks or painful trade days was I had a perfect setup with IBM. Everything was looking good. And for some crazy reason, IBM gapped down. I was in a call to the upside, calls are to the uptrend. And the bottom line was I got stopped out. I was anticipating only a $400 loss. I got stopped out for $1,600 loss. And reason was a gap. It gapped so deep that excuse me, it took a good portion of that position out. So that's how we can do the projections by doing it's a little complicated math. Do I recommend it to everybody to do? Absolutely not. The mathematicians, the physicists, the people who love numbers, the calculus people, the code people who like doing that kind of stuff. Yeah, it's a good nice little exercise. I was just showing it here on what my anticipation is that if we get stopped out here, I'm looking at a 7.5% loss. And if you go back to my past videos, some of my losses were quite heavy in the early days when this channel started back in September 2019 coming forward. So you can see by going by this method here of doing the entry, using the entry point, once price has cleared the gantry, then you end up having to control your losses substantially. And then if it doesn't get stopped out and turns around, then we'll get back to our target of 41.30. If we get stopped out, that would be an addition of a loss. Check that loss amount to the 1934. That's all. The trade's going to come around again in the future, and we're going to have it. I just had a uh, a great exit on the private reserves for Bank of America that netted a little shy of $4,000 profit on Bank of America. But that's a big account. Don't. Those who are getting new into trading, please don't get crazy about. Oh, we'll make $4,000 or $5,000 for the day. Yes, you will, but you have to have the account size to do it. It's not going to happen on a $300 or $500 account. It might happen on a $5,000 account if you put all your eggs in one basket and the basket doesn't get dropped. Yes, there are traders out there who are gun ho and will say, you know what? I'm going for it. I'm looking for it. If I lose 50% or 100% of this account, I'm done. And if they set it up correctly, yeah. I mean, one of my videos, I think it was in the spring of 2020, I had a great position on a put for save, and it came up in spades. It was beautiful, and that's YouTube. It's out there. Go, you have to go look for it. Somewhere in the month of May 2020, I believe. But you look for SAVE, his ticker symbol, and watch the video, and you'll see that it produced a pretty penny return. Okay, well, with that said, well, we have to do our numbers today because we did have a drop. So we have 65.21 minus 55.33 divide by the 55.33 bench as a percentage. Oh, oh, that was a percentage. Uh huh. Okay, did that wrong. Do that again. I'm trying to beat the clock here. 65.21 minus the 55.33. Eight that. Divide that by the 55.33 as a percentage. And the answer is we are 17.9 and the spies at 13.8. And that is it. There was nothing on the scanner today, so we're going to be sitting on our we are going to be sitting on our cash. We are cash strong right now and waiting for opportunity for the market. Well, that is it for today, and thank you very much for stopping by and checking it out.